Hello everybody, what's going on? So in this update, we are looking at hard data that prove one thing. NIO is absolutely dominating the Chinese high-end EV market. We have a chart here that should make every NIO shareholder incredibly bullish. This isn't about volume at any cost. This is about profitable high margin market share. Look at this chart covering the best selling pure electric SUVs priced above 300,000 yuan. That is a premium luxury segment. This is where the big margins are made. And what do we see? It's a NIO clean sweep at the top. Number 1, NIO ES6 with 56,912 total sales year to date. It averages over 6,300 units a month. It's a miles ahead of every competitor. At number 2, we have the new EC6 with 23,031 units. Number 4, new ES8 with 9,524 units. At number 9, we have the EC7. NIO doesn't have one hit, they have a fleet of winners. They occupy 4 of the top 10 spots and critically the top 2 spots. This shows complete control over the premium customer's mind. When Chinese luxury buyer with 300,000 yuan to spend walk into a dealership, their top choices are overwhelmingly NIO models. This level of brand penetration in the most profitable segment is a clear competitive moat. Now let's talk about who NIO is beating. This is perhaps the most important part of the analysis. They are not just winning, they are crushing industry heavyweights. Tesla Model Y, the global EV juggernaut, is way down at number 6 in this premium category. NIO is outselling the Model Y by nearly sevenfold in this specific high value segment. This completely destroyed the narrative that NIO is simply getting squeezed by Tesla. So the big question here is that what does this market dominance mean for the investors? Well, it means margins and margins. The 300,000 plus yuan price range is where a company can command premium pricing, higher average selling price and therefore the highest gross margins. That chart was a clear signal that NIO is not sacrificing profit for volume. They are achieving volume at the top of the tier. As manufacturing efficiency continue to improve and they scale their sales, which we saw with the record-breaking October number, this segment leadership will translate directly into accelerated profitability. Furthermore, this success fueled the rest of their business. The high satisfaction of a luxury buyer in ES6 or EC6 strengthened the NIO ecosystem, the power swap network, the new houses, and their brand equity. This creates a powerful network effect that makes it even harder for new competitors to break into this dominant position. The verdict from that data is unambiguous. NIO is the undisrupted luxury EV king in China's high-margin SUV segment. They are out-executing global giants and domestic rivals not just in one model, but across their entire lineup. This level of brand acceptance and market share in the most profitable category gives investors an enormous reason to be optimistic. The foundation is set, the product is validated, and the demand is there. All these data shows that very soon NIO is going to turn profitable and will generate huge revenue in future. And because of that, we will see some good momentum in its stock price. So get ready for it. With that said, thank you so much for being here. See you in next one.
Hello everybody, what's going on? So today I have got a massive news that confirms NIO is playing chess while other are playing checkers. We just learned that Myretry, the company that manages NIO entire battery network, has closed a massive 94.2 million Series C funding. This isn't just money for a side project, it's a rocket fuel for NIO's core competitive advantage. If you are bullish on NIO, this is exactly the news you wanted to hear. You see, the Myretry is the engine behind NIO's brilliant battery as a service model. Every dollar of this 94 million validates that this ecosystem is a huge success and a series of long asset for the NIO stock. Here's why BAS is NIO's mode, the advantage no other EV company can touch. First, it offers low price. BAS immediately lowered the price of NIO cards by about $10,000, making their premium EVs instantly more affordable and more appealing to the mass market. Second thing which it offers is speed and convenience. Instead of waiting for 30 or 40 minutes to charge, new drivers can swap a battery in under 3 minutes. That's faster than filling up gas, eliminate range anxiety for good. This funding ensured that NIO can rapidly expand its swap station network, fueling its next phase of growth. This funding proves that outside investors sees NIO as more than just a car manufacturer. They see a high-value service provider. BAS creates a recurring sticky revenue every month from battery subscriptions. This turns a one-time car sales into long-term cash flow stream. This transition from a traditional auto company to a tech service platform and what get institutional investors excited and is a key reason why analysts are raising their forecast for NIO's future earnings. And this battery news comes right when NIO is hitting its stride in sales. The company just delivered a record 40,397 vehicles in October 2025. That's nearly double the deliveries from the same time last year. This funding, combined with the successful launch of its new brand like Onvo and a massive surge in overall delivery numbers, confirms that NIO is successfully executing its multi-pronged strategy. This company isn't just surviving, it's aggressively building an impenetrable ecosystem in the world's most competitive EV market. The message is clear. The smart money is validating NIO unique strategy. Meritorious funding de-risks the BAS model and strengthen the platform that supports every single NIO vehicle sold. With sales soaring and the core technology platform now cash rich, NIO is accelerating towards profitability and market leadership. If you believe in the future of flexible, smart, and convenient EV ownership, then the NIO stock story just got a whole lot stronger. And very soon we will see the effect of this news on its stock price as well. So get ready for it. With that said, thank you so much for being here. See you in the next one.